Well, good evening, everyone. Let's go ahead and get started just a tad early. Hopefully, you guys can see my screen, hear my voice. Change some things around in my room to be able to see what I'm doing a little bit better. So, it is Monday, June 15th. Is it the 15th? My gosh. Uh, and tonight's theme for Time Savvy Trader is going to be I came up with this little clever phrase: relief is not the same thing as resolution. And that will make sense here in a moment. So, welcome. Before we get into the charts tonight, I definitely want to spend a few minutes walking through the bigger picture. I spent a little bit of time doing some research today, and this session will be packed. This is one of those weeks where the news, the calendar, and the charts are kind of all saying and talking at the same time. So when that happens, our job is to not get louder. The noise becomes a lot more in our heads. Our job is to get a little bit more clear on what we're thinking. So obviously, the major headline tonight is the U.S.-Iran situation. Now, we've been talking about this for a number of months where oil controlled everything. But as of today, the market is actually reacting to reports that the United States and Iran have actually reached a preliminary agreement to end the Gulf conflict. So that would reopen the Strait of Hormuz and move into a 60-day ceasefire window. And that is a big deal for the markets because Hormuz is not just a political headline. It is one of the most important energy choke points, I guess is what you'd call it in the world. So when that area is threatened, oil moves. And so when oil moves, inflation expectations move. And we talked about that in various different videos. When inflation expectations move, then central banks are going to react. And when central banks react, currencies decide to move as well. So this is not just world news. This is directly connected to what we do as swing traders. So here's the first point I want us to be very, very careful with tonight. Again, relief is not the same thing as a resolution. We've got to go in here with a little bit careful because 60 days is a long time, and history tells us a little bit of how things work out with that type of arrangement. So the market is clearly relieved. Oil sold off hard. The last time I saw this afternoon was at 4% down, which is pretty incredible. The stocks rallied, obviously. Stocks went up. The dollar, as expected, softened. Risk appetite actually improved. But that doesn't mean every problem just disappeared. So the deal still has a lot of unknowns. The nuclear issue is not fully resolved. Iran's regional influence over there and proxy relationships are still a big concern. Um, Israel, I wrote down Israel and Lebanon remain part of this broader tension as I was reading through. And no matter what we talk about, the shipping through the Hormuz is still not normal. It's not going to be normalized instantly just because a deal is announced. So, the correct trader posture, if you were asking what I think, is everything is fixed. And that's not true. Not everything is fixed. So, we still have the posture that we want to take is the markets received a pretty big major relief headline. And now we need to see whether price will actually confirm that relief or if it fades off. And that is a huge difference. So for us as time savvy traders, that means we still do not chase, whether you're Hawkeye or time savvy. We're not going to chase on the first emotional move. We're going to study this reaction. And again, we've talked about TideFusion being geared for trends. This could be our first indication that things are settling back into a TideFusion like structure, which is fantastic. The dollar has been the center of the board for weeks, months, really. We've talked about this over and over again. When the dollar's firm, it definitely puts the pressure on the Euro US, the Pound US, and the Aussie US, and even sometimes gold. When the dollar weakens, those same markets can breathe a bit. And when we look at the Dixie or the DXY chart, and I may share it tonight, the dollar is still not in a clean long-term bullish structure at all. On the 3-day chart, it is still kind of living below those major high supply zones, and we'll see that. But on the daily, it is still trying to hold recent recovery area, but is sitting right near short-term resistance and supply that Sherlock is indicating. So on our 4-hour chart, we can see that price is pushed up. It's been rejected near that upper zone and has now pulled back a bit. So my read is pretty simple on this. The Dixie is trying to just stabilize, but it has not earned the right to be called strong quite yet, and that matters. If the Dixie happens to roll over from this 99.50 area to the 100 area, then euro, the British pound, the Aussie dollar, and of course gold, they would continue to recover. Let me see. I got a chat box here. Yeah, it's been that way for a while. Yeah. I'm not showing a chart yet. We're going to jump into that here in a moment. I'm going to just get you guys some information. That way, when we get there, we readdress it and we'll be okay. So again, if we can kind of get that area solidified, then we're going to start holding above it. Then we need to start respecting that renewed strength on the dollar. So tonight, I don't want to be stubborn dollar bulls or stubborn dollar bears. That's not. I want this to be conditional because we really don't know. Because one day does not make a week chart, and a week chart doesn't make a month chart, and a month chart doesn't make a year. So we need to have a broader look at this. So again, if the Dixie holds the support and reclaims that resistance, dollar strength is back on the table. If it rejects and loses support, then we have clean anti-dollar setup. So that is how the professionals think through it, and we're going to do the same thing. We're not going to they're not going to marry the two opinions together. They're going to build this on a decision tree. So now let's talk about what gold's done. If you've got a chart up on gold, definitely look at it as I go through this. Not a problem to do. Gold is really interesting tonight because gold has been caught between two forces. On one side, the geopolitical risk has supported gold. And when traders are nervous, obviously gold can catch a bid up. On the other side, though, if the dollar's strong and yields are high, that usually pressures gold because gold does not pay interest. So our gold chart tells the story pretty well as well. We'll look at that here in a moment. On the 3-day, gold is still in a broader long-term bullish. We'll see that, but it's also been correcting from those highs. So on the daily chart, it's bounced hard from the lower support area near that 4,000, but it still has that overhead resistance above. So we'll see that as well. So my gold read, as we get ready to look at the charts on that as well, gold is still bouncing, and it is not fully free yet either. And that means we do not blindly buy gold just because of geopolitical headline. Now, however, that's for trading. This may be a perfect time for wealth accumulation purposes, and we'll be talking about legacy later on, a week or two, about how we build wealth through accumulation of assets instead of just investing in trading, longer term stuff. So this might be an area where gold might be an option to purchase for long term, not looking to get in or out within the next year. So we need it to hold higher lows, and so TideFusion to confirm that recovery is actually maturing into a tradable swing opportunity. If gold does keep holding above that short-term support and pushes back into that mid 4,400 area, that tells us the buyers are still interested. But if gold continues to reject and starts losing that 4-hour support area, then the bounce may be running out of that energy that we'll see. So again, no guessing. We'll just confirm it. Now let's talk about the U.S. economy, and then we'll go into our news item. And this kind of encompasses our news items as well. Let me just go ahead and show what the news stuff that's coming up to give you guys some sort of idea what's happening. And we've got stuff tonight even. This is Fed Week. June 15th is a Fed Week. The Federal Reserve is going to meet Tuesday. Let me scroll down. You can see that. They're going to meet on Tuesday and Wednesday is really the big day. We in our YouTube videos we talk about these exact CPI, ECBs, FOMC, all these were talked about on our YouTube video about the news. If you haven't checked that out, definitely do that because this is a great time to learn what all that means. So the market is currently expecting the Feds to actually hold the rate steady. But the real story is not the rate decision. It's the tone of, and we talk about that in that video, the tone of what they're going to say. Does the Fed sound relieved because oil is starting to fall? Does the Fed sound worried because inflation is still hot? Does the Fed keep tightening that bias? Does the Fed hint that rate hikes are still possible later this year? Or does the Fed try to calm the market down? That tone is what's going to be what moves the dollar hard. And this is where it gets fun. And this is where the recent data matters. And this is where an understanding of what these acronyms mean inside of our news item. We just can't look at the number. We need to know what the previous is, what the forecast is, and what does the actual, and then we need to know what the minutes are and the statements that are going to be made. So the latest U.S. job report was still firm. Payrolls were stronger than expected. Unemployment pretty much held steady. Previous months were revised to be higher, and that is not a weak labor market story. And then the CPI came in hot on the headline number as well. Inflation, though, rose to 4.2 year over year. And energy is that major driver, but energy's changing now because there may be, I mean, it's just a lot of fun. Core inflation was not as scary as the headline, but the Fed cannot just ignore the fact that the energy has been feeding it into a broader inflation conversation. So a lot of fun stuff with the news. Now let's tie in this U.S. Iran deal that may help calm those oil prices down. That is the market's hope. But the Fed still has to decide whether its energy shock was just temporary or whether it created a more persistent inflation problem. And there's no way to know. And that is why Wednesday is going to be so important. For swing traders, this means one thing. Do not get over leveraged into Wednesday's Fed event. We can absolutely find setups this week, but we have to respect the calendar. A beautiful looking setup on Tuesday night can get wrecked by one sentence on the Fed statement on Wednesday afternoon. Now, normally these won't have major as much as they have been. This will be a very major week because of the Iran situation. We haven't had normal markets for several months now. So let's walk through the key currencies together, and then we'll dive into our charts. That's so much fun. The euro is getting help from the dollar weakness, and it's also has its own data this week coming out. Germany's numbers remain mixed. We have the ZEW sentiment, final CPI numbers. Lagarde is going to be speaking. So Europe is still dealing with a lot of complicated stuff. They've got inflation pressure, energy sensitivity, because they don't have as much power with the oil as we do, and they have uneven growth. So the Euro US, the question is going to be is whether this is a true Euro strength or is it mostly dollar weakness? Now, if you were watching earlier this afternoon, we got a TideFusion notification on the Euro US, and so we'll look at that. I went ahead and took it, and we'll play very, very carefully with it with this news coming out. So again, if the dollar keeps rejecting, and I mean the Dixie, DXY, Euro US can continue up higher. But if that dollar reclaims strength into this Fed this week, then that Euro US is going to pull back pretty quickly. So the setup we want is not just the Euro up. We really want the structure. We want to pull back. We had a little bit of that today into that support area. We actually want that TideFusion confirmation, which what we got. I'm just not so sure how long it's going to hold. So we want room to that next zone actually. So and the pound US is very similar to this. It's got that heavier calendar this week. The pound has their UK CPI coming out on Wednesday as well. Their labor data, I believe, is on Thursday. And then the bank, let me see, I think the Bank of England's also going to be, yeah, 6 o'clock in the morning. That the Bank of England is expected to hold rates. But again, the decision may not be the big market. That decision may not be the big market mover for them. What they say, their tone, like the U.S., is going to really matter. If inflation stays sticky and the Bank of England sounds concerned, that can support the pound. But if growth and the labor weakness dominate that conversation and the tone's weird, the pound is going to struggle. So, and isn't this great? So for the pound pairs, and this is a very unusual summer. Normally summer's real calm. This is not. So for the pound pairs, I just want to be real careful. There may be some opportunities, but there's a lot of headline risk. So pound US, I think, is going to offer a clean swing opportunity if the dollar happens to weaken and the UK data actually supports the pound. But I wouldn't chase it into the major resistance before CPI and the Bank of England. So we just might want to wait on any more trades. We'll look at it tonight and see what we got. But again, that's another headline news. Now the U.S. yen, another one we kind of pinpoint, especially in the Hawkeye sessions in the morning. This one deserves some respect. Japan is actually expected to raise their rates. And the US yen has been trapped between two major forces, that US rate expectations on one side and the Japanese policy normalization on the other. If the Bank of Japan hikes their rates and sounds confident, then the US strength is going to show up. And again, we haven't been acting, the Bank of Japan and the yen have not been acting like normal over the past 3 months. If the Bank of Japan hikes but sounds kind of cautious about it, then the yen may not get much help. And if the U.S. Yields stay firm, the U.S. yen can remain elevated. Okay, so keep that note down in your journal. So with the yen pairs, especially U.S. yen, pound yen, and euro yen, we need to be very, very sharp. Okay, these pairs can trend beautifully, but they can also punish late entries. So they are not gentle when the macro story flips. So for the US yen, the question is just not, is the dollar going to be strong? The question is, what's the yen going to do about is the yen about to get policy support from the Bank of Japan? So, and that's a very different question. So for the yen crosses, I want us to watch the reaction after the Bank of Japan announcement. I would rather miss the first emotional candle personally and catch maybe a retracement back, cleaner second move maybe, and then jump into a bad location. Now let's look at our Aussie US. Let me just jump to the charts. I think we need to. There's a lot more notes I have, but I think if you guys can see it, and they're not in real great order right now. So let's just talk about, since we just talked about this one. You can see exactly what we talked about. This thing has been just barreling right along. We are in a definite high area. Now, Sherlock is not reflecting any supply. This has to be respected. I don't care. The structure didn't qualify for Sherlock, but your eyeballs can tell something happened right here at that 160 mark that we've always been mentioning. And we just been climbing. That would have been a great opportunity. That one would have been, this is a great one. So we're really waiting for a little bit of confirmation, maybe even a TideFusion signal. Nothing's clear here yet, but that is a huge one. Let's dive into, I don't want to look at the Aussie US. I prefer looking at, well, let's bring the Aussie US up just out of sake of doing it. Let's bring it a little, that's not the one I want. There we go. And you can see we're kind of in limbo. So just as a news item, as we're looking at this, let's look at a daily just to get a broader look. And hopefully your eyeballs can see this. It's a sideways motion with a slight tendency to the upside. Notice we had a TideFusion sell. So there's a lot of uncertainty here. We got Sherlock sitting on the higher side. I think this is a great opportunity. If that dollar will just get strong for this to drop again. This one's worked out really well last week in our Hawkeye session. But Australia, again, has the RBA tonight. So, and the market is expecting a hold. Okay. The Aussies also very sensitive to China, risk appetite, and that oil commodity, their sentiment. So we have China data coming out, I believe, tonight as well. What's Monday night? Let's slide it over. I thought I saw China. Yeah, China news coming out tonight. So Aussie's going to be very active. We just don't really know. So if the U.S.-Iran deal keeps all oil lower and risk appetite strong, this Aussie is going to really benefit. But if China data disappoints or the dollar rebounds before the Fed, the Aussie US can fail quickly. So again, we're conditional. Aussie US is not one of my ones that I would buy because risk is on trade. It needs to prove some strength through some of these structures. So get back into the 4 hour. Again, man, pull back into this area. I'm all over it. Maybe if our ribbon crosses, because remember what our ribbon is. It's multiple moving averages combined into an algorithm. Our dotted lines, different calculations, so that's really not relevant, but it seems to be working. So, man, if we come down maybe to the floor, how much room would we have? We'd have to be really careful with our stop and our target. Maybe get to our, and that's almost gone, maybe go for a 90 pip move, risking maybe 75 at most. That's a perfect one right there. Yeah, so if it comes back down the floor, that would be one I would consider. But no, just know if any one of those news item comes bad, it could turn against us. So not trying to be depressing, but now let's see if we can talk about Canada for a bit. Canada, let's go with US CAD instead of Canadian yen. That's going to be a weird one. This one's been just thriving up, but hopefully you guys can see we're coming into major overhead resistance here. And you're doing daily. I like to look at the 3 hour for, yeah, you've got some major, I mean, the trend recently is down. It's really basically sideways over a 3 day chart. It's definitely sideways on a daily chart all the way back to November. Um, yeah, November high, January 26th low. Then we came back to the high in April, back to the low in May. We're back to the high now. Yeah. Okay. So let's talk about Canadian dollar. Canada has retail sales. We got several things happening, but they have more of their stuff coming. I believe I saw it on Monday. Yeah. So they have their CPI on next Monday. So oil definitely matters for the Canadian dollar. But tonight's oil move is going to be very, very tricky. Lower oil prices can actually Phew. Lower oil can help the global inflation expectation, but it also can pressure the Canadian dollar because Canada is so tied to the energy exports. So, with our Canadian dollar pairs, we have to be extremely careful not to oversimplify things. If oil continues falling because the geopolitical pressures are disappearing, I guess you would call it, that may weigh heavy on this Canadian dollar. So it could go much higher. But if the broader market happens to go risk on and the dollar weakens, then you can watch the Canadian CAD pairs get some strength and some support. So that kind of makes the US CAD a pair to watch, but one not to force. Looking at the CAD yen, and this is what you can really see when the oil starts coming down, you can see the pressure is down with the Canadian dollar. And you can, man, that's just about as good as you can get there as far as looking for what we're expecting. So, with that being there, let's go to our economic calendar real briefly, and then we're going to touch into all of our pairs altogether. I just want to briefly hit the highlights here of what to watch. We know what's coming tonight. You can see the policy, the changes here. Man, that's just interesting to see what's going to happen. But what's most important is what they're going to say at 9 o'clock tonight. So, all right. So here's our calendar. Tonight and tomorrow, we have the China data, as we mentioned, Bank of Japan, the Australian bank, central banks, their feds, the Germans, the U.S. housing data, New Zealand's current accounts. Wednesday's a big one. We talked about Wednesday having all these FOMCs and decisions, CPI for the UK. The Eurozone has their final CPI. We have U.S. retail sales. We have crude inventory. And if you notice at 8:30 in the morning, President Trump's speaking. This is going to be a nut week for Al to be gone and me to be leading Hawkeye. If you can make it, make it. It's going to be a lot of fun. We're going to make sure we try to keep our emotions out of it. We may not take any trades, but we're sure going to have a lot of fun watching what happens. Thursday, actually, let me go down to Thursday. Thursday does not bring any calming. It actually brings some UK labor information out, and the Swiss comes into play. The Philly Fed job numbers come out, jobless claims come out, and the Japan inflation data comes out. So Thursday is not going to be much different. Then we go into Friday and we can take a deep breath. It's a little bit lighter because the US actually has a bank closing for Juneteenth, but we still have the German PPI. And so it's not completely clear. Then, like we mentioned, next week, Canada CPI comes in, and that sets up the next week's Canadian dollar story. So this is not going to be a quiet week. This is a week where the market can definitely move cleanly, but it can also whipsaw traders who ignore the calendar. Not as much in our swing trading as much as in our Hawkeye, but still with our swing trading, we want to be careful that we have some clear room to move, because what we've noticed from our swing trading is we're not in it for a week or two like in the past. We're in it for 2, 3 days, 4 days most, and then something happens. So we want to be very, very careful. So tonight, the right move has to pass a few tests. So number one, does the macro, bigger 1 day, 3 day story support the direction in what we're trading in? And we'll look at one of the trades we've got, I jumped into based on TideFusion. Number two, does the chart actually give us the clean structure we're looking for, or are we late? TideFusion is really good about helping us find that structure. Number three, is the dollar confirming us or fighting? Number four, is gold confirming us? Is it risk off? Or is inflation concern? Or is it just bouncing around? We don't know yet. So number five, is there any major news directly in front of the trade that we get in? If it is directly in front, then we got to be careful. TideFusion actually confirming the setup, or are we trying to shove ourselves into trade? And then one last thing matters most. The market does not owe us a trade tonight or even this week. And I know Jonathan understands what I'm saying. It does not owe us a perfect setup. And it definitely does not owe us a follow through, which we found to be true, especially before the Fed. So if the cleanest decision is to wait, we're going to wait. Okay. It's just what it's going to be. And we haven't taken many trades. I haven't taken any live trade for 2 weeks on our swing trading because it hasn't been clean. I've done it in our demo for education reasons, but I've not taken anything. So my broad view on for tonight is I'm kind of cautious on chasing the dollar straight, because the Dixie, showing you guys, I promised I would show you this. This is CAD yen. The Dixie is not really giving us a whole lot of look here. Now, our TideFusion is not calculating on this for some reason. I'm not worried about it, but I don't need it to. What I want to see is that. 4 hour charts, we got resistance above us. We got a major resistance. We've got some support overall. Hopefully you guys can see when you squish and squash. And you really want to be looking on a daily or a 3 hour, or 3 daily chart, a 3 day chart. And we taught this in our Hawkeye session. I'll show it to you again. This is a great, great thing to do. Come in, find your high, put a green line just so you can see. Okay. Yes, I will. I can do that. Uh, yeah, you got it. My TideFusion is getting ready to be updated, so let me update it first, and then I will share it with our members. Absolutely. That is on the plate. Matter of fact, the systems are checking everything as we speak. And when it's done, I will share. So that's what we got to look for. We're caught here, and hopefully you guys can see that on the daily. I didn't pick this pivot low because price didn't hit it constantly. But if you look where I picked here, here, and then same thing with the tops. I didn't pick this high because look at the many times. So this is our playground. We're really up there. We need a breakout. Now, if we happen to break out above that green line, we've got some room to move. Lots of room to move. Okay. So that's kind of what we're looking for. If we look at the 3 day with our lines, it's the same picture. Now we don't have near as much room to move, so we want to take it from here. That's still going to be about 200 pips. That's plenty for us. That's a 3 day chart. And you're gonna start wondering why I'm using 3 day charts, but I'll explain it later on in other videos. But our 4 day, look where our 4 days at. So what do we want to have happen here? Obviously, our best trade, and let's see if I can do a happy place. If it'll let me put a happy face right there. That's about my happy place. I really don't want to get into a dollar trade anywhere here. It doesn't give us any confirmation. So at any time, it could move. Okay. When I say a dollar trade, any of these pairs that have the US dollar involved, it's going to be a tough sledding. I think it's going to move up through this, at least this first one, so we have some room. But I can't guarantee what the news is going to do. So just be prepared for that. We are, I would put the gold on the watch list candidate. Definitely don't want to buy it with overhead supply. I mean, we can see the same, it's the same thing. There's your overhead supply on the 4 hour. You can see the overhead supply on your daily, and the same thing with your 3 hour. But look at the push. We've come down to a very, very key spot and moved up, but we got some real. This is a turning point. We're going to see if the dollar gets strong, gold's going to get hopefully weak and get back to more normal stuff. So keep an eye on that. Respecting the US yen, let's get to the US. I think there was CAD yen I had up here before. I don't know what I had up here. Let's go ahead and put CAD. I think I had CAD yen. Let's see how much I got there. That's too small. I got to make I need to make my time savvy trader charts a little bit better on my watch list because I end up putting things I don't need. So I got my pound yen, I got my euro US, I've got my pound US somewhere. That's the one I'm missing, pound US. So we're going to put that pound US right there and set it to our 4 hour. Okay, there we go. So, yeah, this is for time sat or time fusion. You can do all you want to do because this is definitely not the Hawkeye setup. I got my own Hawkeye setups ready to roll. So, respecting yen volatility, again, Bank of Japan's come into play. Again, UK CPI. The big message tonight, we are really kind of in a relief time period. I call it a relief rally, not fully a resolved one yet. That means there may be some opportunities, but there's still going to be risk under the surface. So tonight, um, respect the calendar as we get ready to shut down. I do want to look at the Euro US and why I got in it before we end. But respect the calendar. Use the Dixie and gold as kind of your macro compass. Let TideFusion help you narrow down the board with its alerts or with your visual alerts. And most importantly, let's remember that our edge is not being too early to every headline. Our edge is actually going to be prepared when that clean setup actually shows up. You can either use a retracement tool, retracement back to a Sherlock, a breakout using either TideFusion or Sentinel. And that's how we're going to trade with discipline, and that's how we protect the capital. Because right now, capital preservation has been kind of my heart's desire. And that's how we give ourselves a real chance to stay in the game long enough to have the real right opportunities matter. So, again, we'll see what happens. So let's quickly go through with the time we have remaining, looking at our pound yen, seeing if there's anything we can do here. I would not do looking quickly at the 4 hour. I would do nothing with this unless it came back down here. Why? Because you got your line. Draw your line if you need to. It's right there. Not enough room. And it's our weekly ceiling. Not enough room. Things are flattening out. We can quickly go to our next pair and we can look at the Euro US. Now, I took this based on just a nice crossing, nice signal here. It's a fast buy. Again, high risk. When you see a fast buy, that is not a automatic get in as fast as you can. That fast buy actually means it's a pre-set up opportunity. Okay. And it has not followed through with a buy. That doesn't mean it's not going to work. Fast buy just means it's a possibility that a buy structure is happening. So what did I see? I saw this area right here. Let me get this area right here. That's what I want to show you guys. This is where I wanted my entry to be, but this is where I would expect if we're going to have some strength in this general area is where we'll get our TideFusion buy. It probably won't happen for the next few hours. It'll probably happen, if it's going to happen, either tonight when we're sleeping for those in the US or bright and early in the morning. And we'll see. Until then, I'm in it as a fast buy for education purposes. It's not gone anywhere. That's good and bad. I think it's going to dig into this area right here. You got this nice rally basing. It's more than a Sherlock basing allows. That's why it's not identifying it. But this area right here, you can see reject, 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 reject. It broke those rejections, came back, tested it right before, and now we're trying to bounce. That's what I'm looking for. This little area right here. That's why I jumped in. Can you jump in? Yeah, you could right now if you wanted to. You get a better price than I did, but you'd have to trust the system. You also have to be understanding that at any time when that news comes out, it could flip on you. So take your risk reward. I risked 1% of my trade, as I always do, and moved on. Let's look quickly at the pound US. Not a whole lot to see here. Very, very easy. You can see why we would not go into it. Our buy would not have worked out. We went right into supply area, fell back down below the pivot. That would have been a losing trade. Now you can see where we made some money on our day trading, but this is not day trading. So what am I going to do? Absolutely zero until structure gives me a time. Could I trade it down here without TideFusion? Absolutely, I could. By that time, I would assume that the news would have been out and solidified. Could I trade it short up here? Absolutely, I could, but I'd be definitely more careful about that as well. So you're in the middle, wait, move on. Again, these are tied to that US dollar, so you just need to be keeping an eye on the Dixie. Pound or euro pound could be interesting because it's not tied as much to the US dollar, but if you notice, it has just died. It doesn't know what it's going to do. There's nothing clear and evident here, and it makes for a very quick time savvy trader. If anything, we're in a sideways market with a bottom um, feeling. I would say it's a kind of leaning that way, but you can see just quickly putting a line there. That weekly and monthly floor is what is holding. It's getting compressed. It's waiting for something. And I'm guessing this news to figure out which direction it wants to go. So again, great pair to trade, just not tonight. And maybe not this week. Kiwi US been interesting on our short-term Hawkeye. Again, just respecting the tools that we use. You can see the bias is downward on the 4 hour. Again, that means US dollar strength overall. But again, we're respecting our Sherlock zones. We're on the higher side. This could be a wonderful, notice the fast sell here. You would still be in this trade. This one could have worked out as a fast sell. We'll see. If the dollar gets strength like I think it's going to fall down. We'll see what happens. We don't know. It looks like it wants to fall down. You have the resistance above it. This would be a fantastic. If this will turn, excuse me, if this turns red, breaks below these bottoms here, we could very well get a fast sell again. And we'd have our pivot right here, put our stop right above here. It'd be fantastic. We do have some little headway to get through there, but we have our trade rules in place that when we hit a certain precision, we move move our stop. So to protect whatever capital that we have. That's the Kiwi US. Again, time savvy trader, we move fast. US yen we've already talked about. Let's Aussie US, I believe we've already talked about. It's ugly. That sell would have been nice. That structure fit very, very nicely. Your stop would have been up here. You had already hit your target. You've been out of it, but we haven't got one of those structures yet. As a breakout of the bottom there. So the TideFusion recognized. And again, I'm watching some of these videos now that I'm out of school. Everybody's talking about their algorithms now working. Yeah, okay. And then I've been listening to a few other people who've really got some good ideas. But hindsight's always 2020. It's always great to teach a lesson with hindsight. My tool would have done this if and this. Okay, you didn't know that going in. This would have been a good buy. And why? Because you have this nice structure here. And again, we're looking for structure. Why is it a good buy? Well, the candles cleared both the ribbon and the numbers. You could have jumped in right here if you wanted to. When it turned green both ways, that was a good signal. We had a movement up, and it's doing exactly what we expected to do. There is no trade to be had right here. If I was looking at the US CAD, I would wait for the pullback to this area. That's a pullback trade. TideFusion will not give you a signal for that at this point. It'll be looking for the structure, which has already happened. It could give you another one later on, but we don't know that for sure. Looking at, we've got the pound yen, pound US, US CAD, euro yen we could trade. Let's look at the euro yen real quickly. That's going to be a strange picture. I bet. Yeah. Yeah, another one of the same thing that all the other pairs, you have this major drop and just flattening out, kind of we're chewing up this major drop slowly and surely, no direction, so we can move past that one. We talked about this one, talked about let's talk about Aussie yen briefly. Looking at, this is a daily chart. Let's move to our 4 hour. Again, not real clear of what we want to do here. We possibly, Aussie yen possibly could get a nice structure here, waiting for these to change color, our ribbon to cross over, green, green, and this demand zone here. And if the yen news comes out, this could be a setup tonight. If the yen comes out and does what it's supposed to do and the Aussie gets strength from China, then we definitely could have an opportunity on the Aussie yen. Last one is our US Swiss. Remember, this used to be our darling. It is not our darling right now, but it looks like it could potentially come back to being our short that we've always held on to and been so thankful for. I'm not so sure we're going to do it yet. The structure's not there. We do have some major, major noise. So let's look at our 3 day to see what it really looks like. You can see we got out of it right here, way on back. It was this area right here that we enjoyed this early part of the year. We were sideways, broke down, retested, came down. We are just sitting in limbo land with this one too. So again, not anything strange. Let's look at our triple Qs and let's talk quickly about wealth accumulation. We'll call it done. You're going to start hearing more and more about a wealth accumulation opportunity. I'm not sure what we're going to do with it quite yet, but our goal and objective with Trade Masters is to build wealth, not just possible income streams, but wealth as well. This is a perfect opportunity to talk about wealth accumulation based on the 3 day chart. Our tools tell us a lot of things already with Sherlock of where potential we could have got in. You can see where we created a zone, could have touched off here and accumulated. Obviously, we'd had to have some rules to get out if this was too much for us. And then we had this nice zone, hasn't been touched. Had this nice zone, hasn't been touched. Had this nice zone. So we've got another opportunity. I mean, lots of zones to get in, but this one would have been our best one because it actually touched. This one would have been a good one to get in because it actually touched. But look how far back that is. 2023, if you'd owned 2023 and it touched, you would have bought it at 2023 of October. You would have ridden this thing most likely all the way to this point right here, which is a long ways for the Qs, starting in around you would have been right around the 340, and you would have probably gotten out around the 500 mark. And then you might have gotten in again here and ridden it up. Again, I'm looking at possibly building a tool that will do all the thinking for you on higher time frames, so you guys can actually start not looking to trade or invest in short term, but actually looking to hold assets, all types of assets for longer term and until you get a clear signal getting out. And we'll talk about that later on. So that is our session tonight, guys. If you have not gone into our YouTube channel, make sure you do that. Watch the videos. Let me show you real quickly to end our stuff. We've done a lot of work on our YouTube channel to get it to be a flow, very, very simple. If you have new friends and friends that are new to trading, start them here. Share it, send them out. If you haven't watched it, make sure you watch it. Make a comment. What did you learn from the video? This whole series is going to be good for every member, period. And when you go through, look for the highlights, take journal notes, put it in the comments, because what it's going to be doing is it's going to be helping our YouTube analytics. And those YouTube analytics open up little extra things that we can do and get creative with behind the scenes. So that's a very, very huge help for us. We definitely want more subscribers. Once we get 100, we also get a couple of extra bells and whistles behind the scenes. It doesn't affect really the channel other than what we can offer you guys in viewing opportunities. So lots of stuff to go through. This is a great series all the way through. Right now, we've got all this week's past Hawkeyes. That's for the public viewing. Tonight will be our last Time Savvy Trader for a while that goes to public. We will have our members only situation set up. I'll show members how to access member only video. That's where our future archives will be for Hawkeye and Time Savvy and any other lessons that are needed that have been talked about, like our MT4, MT5 comparisons. We have a couple other ones that people suggested we do, and these are going to be short 15 to 30 minute videos, hopefully, because we know that our attention span is definitely not much longer. Focused attention span is not much longer than 30 minutes. So make sure you share our page with others, get people involved, watch the videos, and get dialed in this summer as we start building our foundations. If there are no questions, we're going to go ahead and call it a night. Man, what a load of information smashed into a very, very short time period. I appreciate you guys being here. Appreciate you guys that are going to be watching this a little bit later. God bless, and we will see you sharp tomorrow morning for the Hawkeye session. I believe that starts at 6 a.m. Central, 7 a.m. Eastern. I may start it a little bit early. I'm already anxious to get going on it. I don't know if I'll sleep tonight or not. And if I don't, I'll be up early doing it. So, any which way, God bless you guys, and we will see you hopefully in the morning for the Hawkeye session.